All right, investors buckle up because things just got interesting. Trump back in the White House round two.
Yeah, it's definitely a big one. Everyone's wondering what it means. What's it going to mean for markets, for their portfolios, crypto, all that good stuff.
Exactly. And I think a lot of people were expecting maybe a different outcome this time around. So we're going to do a deep dive today, all about the potential impacts of a second Trump term. We've been digging through expert analysis reports, all that, trying to figure out what this means for you.
Yeah, trying to see past the headlines, really understand what a Trump presidency round two means for your money, for your investments.
Absolutely. So let's just jump right in. I mean, we saw a pretty specific economic playbook,
Hmm.
back in his first term, tax cuts, deregulation, those trade wars, especially with China.
Mm.
Does that playbook still apply, or is this a whole new ballgame?
Well, I think there are definitely some familiar themes, emerging, but it's not just a simple copy and paste from 2016, right?
Hmm.
The world has changed. Global economics have shifted.
Right. And I think one of the biggest things on everyone's mind is this potential recession that people keep talking about.
Absolutely.
How does that factor into all of this?
That's a great question. I think a looming recession could really push, those tax cuts that we saw in his first term to be even more aggressive. Maybe double down on policies aimed at, boosting business growth, even if it means pushing that deficit higher.
Right, so short-term sugar rush, long-term consequences, maybe?
Potentially, yeah. And that's what makes it so interesting for investors, right? We're going to think about short-term gains, how those might be offset by things like inflation, trade war backlash. We are in a global economy now, right? So those things matter.
Absolutely.
Okay.
All right, so let's zoom in a little bit sector by sector. Those core policies, the tax cuts, the deregulation. Where are we seeing winners and losers emerging on the stock market?
Well, if history is any guide, the sectors that did well under Trump before could see another boost, right? So we're thinking energy likely benefiting from, less environmental regulation, financials, maybe enjoying lighter oversight. Consumer goods could get a bump if tax breaks put more money in people's pockets.
Right, the classic trickle-down theory.
Exactly.
Okay, but here's what I'm curious about. Back in 2016, a lot of people thought tech would struggle under Trump, but they actually did pretty well. So
Hmm.
what's the outlook for tech this time around?
Yeah, tech is a really interesting one because, despite those initial concerns about trade wars,
Yeah.
potential regulations, they actually benefited from a fairly hands-off approach during that first term. But this time it might be different.
How so?
Well, the global landscape has shifted, right? China's tech sector has become even more competitive,
Yeah.
and there's more pressure on U.S. companies, to maintain their dominance if those trade policies become more aggressive, especially towards China. Companies like Apple, Tesla, even Google, who rely heavily on global supply chains, international markets, they can face some serious headwinds.
So even if those tax cuts are juicy, that potential trade war fallout could really negate those benefits for some of these big players.
Exactly. It's not a one-size-fits-all situation.
Yeah.
Investors need to think beyond those broad strokes,
Right.
right? Really dig into how individual companies might be affected by all these different factors, domestic policies, global economics.
Yeah, you got to look at the specifics for sure. All right, so message received due diligence is key. Don't just assume what did well before will automatically thrive again. We got to look at the specifics of each company, how they might be impacted by this new global chessboard. Speaking of things that are a bit unpredictable, let's shift gears to the world of cryptocurrency. I mean, crypto's already on its own roller coaster ride. How might a Trump victory add fuel to that fire, or maybe even throw some water on it?
It's a great question, and I know a lot of crypto enthusiasts are grappling with that. The good news is that Trump has historically taken a fairly hands-off approach to crypto regulation.
Right, there were rumblings, but no major crackdown.
Exactly. So a continuation of the let them innovate philosophy, potentially.
Potentially okay. And for a lot of people in the crypto world, that's a good thing. Less government intervention, more space for innovation, especially in exciting areas like DeFi and blockchain technology, which, by the way, could see a huge surge in interest if Trump's policies lead to even more economic uncertainty.
Hold on, before we go too far down the crypto rabbit hole, can you just give a quick ELI 5 version of what DeFi and blockchain are all about? I know we've got some crypto newbies listening in.
Of course, think of blockchain like a giant, super secure digital ledger that can track anything of value. That's what makes cryptocurrencies like Bitcoin possible, and DeFi or decentralized finance. It's like rebuilding the entire financial system on top of that blockchain, cutting out the middlemen, banks, brokers, letting people lend, borrow, and trade directly with each other, all powered by code.
So it's like a Wild West version of Wall Street, but with computers instead of cowboys.
That's one way to put it. And because it's still early days, DeFi has the potential to really disrupt traditional finance in a big way. And that potential is exactly what attracts a lot of investors, especially in uncertain times. Got it. So back to Trump and crypto. Less regulation, more innovation. That sounds like a recipe for a potential crypto boom. But there's always a but, right?
Right, and that but is the million-dollar question everyone's asking. Will Trump's hands-off approach actually hold up? Will there be other unforeseen factors that come into play and impact the crypto market?
Okay, so let's dive into those potential twists and turns. What are some of the things that could throw a wrench in the crypto gears, even if Trump doesn't go full-on regulatory hammer on them?
Well, for starters, even if Trump, keeps that laissez-faire approach, that doesn't mean other parts of the government will necessarily follow suit.
Right.
You could see agencies like the SEC, the Treasury, taking a more active role in crypto oversight, maybe pushing for stricter KYC AML requirements.
Oh, yeah, those know your customer anti-money laundering rules.
Exactly. Those could make things a bit more complicated for everyday crypto users.
So even without outright bans or heavy regulations, there are other ways the government could make things a little less Wild West out there.
Precisely. And let's not forget about the Federal Reserve.
Right.
They're exploring their own central bank digital currency. The digital dollar, how that plays out under a second Trump term is anyone's guess.
Yeah, that's a really interesting one because, I mean, Trump hasn't always seen eye to eye with the Fed, but a digital dollar could actually align with some of his economic goals, right? Like, wouldn't it potentially make those government stimulus checks, tax rebates, even easier to distribute?
That's one possible scenario. A digital dollar could streamline a lot of government transactions, potentially even give the U.S. a strategic advantage, in the global financial system. But here's the big question for crypto. Would a digital dollar compete with cryptocurrencies, or would it ultimately legitimize the whole concept of digital assets?
Almost like a fork in the road for crypto.
Yeah.
One path leads to more mainstream acceptance, maybe even integration with traditional finance. The other path leads to, who knows, maybe a showdown between decentralized crypto and a centralized digital dollar.
Absolutely. That's why it's so crucial for anyone interested in crypto to stay informed and adaptable. It's a rapidly evolving space, and the political landscape just adds another layer of complexity.
For sure. All right, so we've talked about some of those regulatory uncertainties, the potential for CBDCs to shake things up. But what about those global economic forces we were discussing earlier? Like, if those tax cuts do lead to higher inflation, wouldn't that actually be good for Bitcoin? Isn't that the whole Bitcoin as an inflation hedge argument?
It's a popular narrative, and it's not entirely without merit. And when traditional currencies lose value due to inflation, people often look for alternative stores of value. Gold has historically played that role, and some believe Bitcoin could become the new digital gold.
So if those prices keep creeping up, people are feeling like their dollars aren't stretching as far, we could see a flight to Bitcoin. It's certainly a possibility. And a weaker U.S. dollar, which could be a side effect of those aggressive economic policies, would further fuel that trend. People looking for safe havens for their wealth, and Bitcoin, with its limited supply and decentralized nature, could become very attractive.
Okay, so potential upside for Bitcoin in an inflationary environment. But we'd be remiss if we didn't talk about the flip side, right? The risks, the potential downsides of a Trump victory, particularly for those who are all in on crypto. What are the red flags investors should be watching out for?
Well, as we already touched on, regulatory uncertainty is a big one. Even if Trump himself remains relatively crypto-friendly, we can't predict what other government agencies or future administrations might do. And any whiff of a crackdown, whether it's on crypto exchanges, stablecoins, or even crypto-friendly banks, could send shockwaves through the market.
Right. It's like that whole not your keys, not your coins mantra in the crypto world.
Exactly.
Even if the government doesn't ban Bitcoin outright, they could make it a lot harder to buy, sell, or hold it. It's exactly. And then there's the broader economic risk. If those tax cuts and spending sprees don't actually stimulate growth, and we end up with a stagflation scenario, high inflation coupled with slow economic growth, well, that's not good for any asset class, crypto included.
So it's not just about whether Trump likes Bitcoin or not. It's about the potential ripple effects of his economic policies on the global stage and how those ripples could rock the crypto boat for better or worse. It sounds like navigating this landscape requires a delicate balance of optimism and caution.
I think that's a great way to put it. We need to acknowledge the potential opportunities that a second Trump term might bring for both the stock market and the crypto world, but we also need to be realistic about the risks. This isn't a time to be blindly following the hype train or burying your head in the sand.
Absolutely. It's about staying informed, understanding the forces at play, and making strategic decisions that align with your individual risk tolerance and financial goals. Whether you're a seasoned investor or just starting out, This is a time to be actively engaged, not just passively reacting to the headlines.
I couldn't agree more. Knowledge is power, especially in a world where the rules of the game seem to be constantly changing.
So where does that leave us? We've covered a lot of ground, from potential stock market winners and losers to the wild world of crypto with all its potential booms and busts. What are the key takeaways our listeners should be walking away with today?
I think the biggest one is that uncertainty is the name of the game right now.
Yeah,
We're in uncharted territory. A second Trump term just adds another layer of complexity to an already volatile, economic and geopolitical landscape.
absolutely. But like you said, I mean, within that uncertainty, there's opportunity.
Right.
We talked about, certain sectors that could see significant growth under Trump's policies, energy financials, maybe even some tech companies that can, weather the storm of those potential trade wars.
Absolutely. And let's not forget about crypto, right? If those inflation fears materialize, that hands-off regulatory approach holds up, we could see a surge of interest in Bitcoin and other cryptocurrencies.
Yeah. Yeah, absolutely. But at the end of the day, I think you said it best, that the decisions you make today should be based on a deep understanding of your own, personal financial goals, risk tolerance.
Exactly.
So don't get caught up in the hype. Don't panic based on, what you're seeing in the headlines or on Twitter or whatever it is.
This isn't about, blindly following the crowd.
Yeah.
It's about being informed,
hmm
doing your own research, making strategic decisions that align with your long-term vision.
Couldn't agree more. I think one of the most important things investors can do right now is diversify their portfolios.
Absolutely.
Don't put all your eggs in one basket, whether that's tech stocks, Bitcoin, or anything else. Spread your risk, explore different asset classes, be prepared for some bumps along the way.
You're building a financial fortress, right?
Yes, exactly.
You want a strong foundation, multiple layers of defense, a lookout tower to keep an eye on the horizon.
I like that analogy.
And remember, this is a marathon, not a sprint. Don't make impulsive decisions based on short-term market fluctuations. Stay focused on your goals, be patient, and be willing to adapt as the landscape changes.
It's almost like we're all becoming financial ninjas, learning to move stealthily through this volatile landscape, anticipating those potential traps and seizing those opportunities when they arise.
I love that image. And as with any ninja training, continuous learning is essential. Don't just passively consume information. Actively engage with it. Challenge assumptions. Seek out diverse perspectives and never stop learning.
Well, this has been an amazing conversation. So insightful. Thank you so much for sharing your expertise. I think we've given our listeners a lot to think about as they navigate these, potentially turbulent financial waters.
It's been my pleasure. I always enjoy these conversations, especially when we can help people feel more empowered to make informed decisions.
And to our listeners, thank you for joining us on this journey. Remember, knowledge is your greatest asset. Stay curious, stay informed, and keep investing in your future.
And on that note, we'll sign off for today. We'll be back next week with another deep dive into a topic that's shaping the world around us. Until then, stay sharp and stay engaged.